Good morning, everyone, and welcome back to this new session of the morning briefing. Let's do a recap of, what's been happening in the last few days. Well, the market has been stabilizing a little in recent days, but essentially, the markets are moving sideways. If we look at everything on more long-term charts, we see that in recent days. But even by reducing it to, a 5-minute chart like this, we can see that how we have been moving sideways in the last few days. And this is somewhat due to the overall global situation, which is evolving. There is a lot of uncertainty. Uncertainty obviously doesn't appeal to the markets because, at this moment we are navigating by sight. There are too many variables to consider in order to position oneself for the medium to long term. Looking more closely at what is happening globally, we see that last night from the FOMC, essentially, there was an interim session that did not reveal anything new. Also, from the minutes, it is read that there is an expectation of uncertainty because they themselves do not know well what the developments of all these variables might be. So imagine if they have doubts at the Fed, imagine how many questions we should ask ourselves when we decide to position ourselves more long-term on some asset. So, absolutely. In short, I remind you that in the end, the Fed has the dual mandate, which is to keep prices under control and achieve maximum employment. And at this moment, both of these variables are not stable, which is why the Fed is cautious. And for this year, the market, as can be inferred from the dot plot, let's say, is trying to understand. There will be 3 cuts. In short, the market is currently anticipating 3 cuts. We will see if in short there will be room to understand the extent of these cuts gradually as more recent macro data arrives and includes in short these new developments regarding the trade war. Speaking precisely about the trade war, in short, the market, cooled off a bit yesterday at the close with Trump's announcement of, imminent agreements. But in short, I also read some reports that talk about agreements, essentially agreements in principle, so the details of these agreements are missing. And with these details missing from these agreements, in short, certainly the market initially reacts as it is reacting, with these violent upward surges, but then, it ends up retracting everything because you see the details are missing. Essentially, I believe this could probably be a move by Trump to gain some support, given the decline he is experiencing in the polls. And after the first 100 days of his term, to bring home some results, to slightly reverse this trend of decline in the polls. There could be some principal announcements, discussions with the UK and thus with India. But the details of these agreements are missing. So we remain in the same uncertainty. Therefore, the reason why one might on these news that can reach the market, one might try to adopt a contrarian strategy by selling on the spikes, precisely because lacking details of these agreements, the market retraces as it wants to know the details in order to position itself. Perfect. Well, that said, having said this, there are also many operators who view this upward movement we are experiencing as essentially a bear market rally, in the sense that precisely due to the lack or absence of all these certainties we have mentioned so far, they expect the market to then correct significantly. From a technical point of view, there are levels that, well, are being defended very, very precisely. Now we will go and look at them and, well, reasons why they are defending these levels. Well, because probably, well, at those levels, we find ourselves in situations of positive gamma, which is why the market is moving sideways, precisely because the market makers are forced to sell if the market rises and to buy if the market falls, which is why the market continues to move sideways. In addition to this, then, as we have already mentioned, well, in recent days, buybacks have started by the large companies. Well, so there is an influx of money into the market. Well, quite significant. Yesterday, there were also the auctions of U.S. government bonds, and they continue a little bit, in my opinion. They must continue, in my opinion, to be a little concerning regarding the trend of U.S. government bond yields, which continue to spike and to rise. Because I'm not saying because, well, the United States, there's a risk of default for the United States, but certainly all these uncertainties, therefore, increase the uncertainty, which is why investors, when they have to lend money, even to America, when we extend the time horizon, obviously demand a greater reward, since the risk is higher. Not because, I repeat, there is a risk of default, but the risk has certainly increased. So all these variables must be absolutely considered. I have gone on a bit in this first part also because there are no significant macro data both today and tomorrow. Well, so it was in my opinion, essential to focus attention for a moment on all these points and on all these things that are, let's say, currently in the market. Perfect. With this introduction done, let's obviously take a detailed look at some operational levels. As we were saying, for the NASDAQ, levels that have been defended with a lot of strength. For the NASDAQ, we're talking about 19,750, 19,700. It's a very, very defended level, which they have defended. At the moment, we are on the upper part of this sideways movement that has formed in recent days. So we monitor the upper part of this sideways range, which for the NASDAQ we can identify in the area of 22 to 2300. And on the downside, we just mentioned 1907, 19,750. So these are the areas I would monitor. Inside, in short, we are witnessing noise, in my opinion. As for the Standard & Poor's, we can identify these levels between 507 to 507 and 20, more or less. And on the downside, 516 has been defended many times, truly a level that is becoming an important barrier. So, absolutely, these are the two levels to monitor. Obviously, in short, upward breaks could then target the 5.8, 5.8, 20 area. I don't know if you remember the chart I showed you a few days ago. I don't have it on hand right now. The one with where this fourth wave was about to develop, in short, of the same intensity that could have those targets we indicated. Then, in short, there's also the post in the chat with all the details of this study done and posted in the chat. So, we are monitoring these levels regarding the Standard & Poor's. Let's obviously also look at the other two American futures, but they are essentially in the same condition as the EAS on the rise regarding the Dow Jones. Let's monitor 45, 41.5, 41.8. On the downside, let's monitor the 40,000, 48.45 area, which seems to me the most interesting as support. As for the Russell in particular, We've already pointed out the area several times. Basically, the range is always the same. Essentially, we have this spike that occurred here around 2000, and so the level I frankly consider most important is this 2025, 2026 essentially. That's the one to break, in my opinion, upwards. To the downside, we are monitoring 1985, and again, look how many times this zone, this area, has been tested, both upwards when it was tested from below, and then when it served as support on all these other occasions. Let's look at the DAX, which at the moment is experiencing a somewhat peculiar situation, also due to the, let's say, internal political situation, even though it has gained confidence after the second vote in Parliament, and we'll see what developments and outcomes might arise from a political standpoint. From a technical standpoint, let's say the DAX is also moving sideways. It had a very well-defined upward channel, but at the moment it's somewhat disrupted by this sideways movement. However, we can't exactly classify it as a purely sideways movement, similar to what's happening with the American indices and futures. These aren't merely sideways movements with low volumes. There are significant volumes involved. So, we're in a phase where this sideways movement will eventually break out violently in one direction or another. It could be an accumulation or a distribution, depending on the outcomes of all the issues we've previously mentioned. So, on the downside, we are monitoring the area around 23,020, for the DAX specifically around 23,150, 23,100. On the upside, we are also monitoring the BC3 level, which encompasses this entire area here. So around 23,480, 23,500, essentially this area of highs here. Gold, on the other hand, has broken the support level that we indicated yesterday, which had held up very well, working excellently. There was a test right at the peak area, a false breakout of the area we had indicated, a pullback, and then a continuation downward throughout the night. At the moment, we are already at the minimum levels. The price has now bounced and was flying below SD2. So the situation is getting a bit heavier, probably as a result of this push on the indices, on the stock indices. At the moment, it has settled right here, as you can see, on this entire area, which is currently acting as support. So holding this level could easily bring prices back to test this whole area from below. And then we'll see if they might find the strength to push the price on down again. If it should re-enter, I frankly expect a reversal of the range and a return to the area of the highs again. I think I forgot to mention oil in the previous screen, so let's take a look at it right away. Here it is. Here it is, the oil, which after recovering yesterday then corrected a large part, returning to retest the area of this double bottom here around 57.70, which represented the Friday close, followed by the OPEC announcement opening with this gap downwards. I hope that he retested the level, which was also failed today, which rejected and halted this decline for the moment. Yesterday, Isteco, and indeed during the session last night. At the moment, we are working above the HV level, right near RD0. We might see a bit of sideways movement, but frankly, if the situation remains as it is, another bearish push could likely start from here, which could bring prices, as we have previously indicated with a study done, that could bring prices down to the 50 area if all this negative situation of recession and increased production is confirmed. For SPX, a similar situation on the downside. Let's monitor this area here, 55.70, 55.60. It's the area I consider the most important support. On the upside, let's monitor 56.60, 56.70, because a break of this area could easily lead prices to above 700, so into the 750 area. We still have to look at Bitcoin, which yesterday made exactly the move that was, well, we had imagined could happen with the push on the stock indices. There was a test of the 97 and 98 area, a bit of retracement. Then last night there was a nice upward surge. That brought all the prices to almost reach the 100,000 mark. At the moment we are working at 99,350, more or less between RD0 and RD1. You can see how it made this nice high, then a retracement on HV, and it started again. So a break of this could easily bring prices into the 1D max area. Let's obviously also take a look at crude and gas. For the euro-dollar Forex, which in short broke out of this sideways movement yesterday that we had pointed out yesterday morning. It broke through SD1 and went all the way down to the Pero 1D max, in short, and closed in this area, in this zone here. Last night it then attempted a recovery that went, well, to work on RD1, on RDO, on RD1, where there was then this whole area, of resistance that had formed in the previous days, after which, in short, it couldn't pass through again. The price slipped back down, breaking even yesterday's lows, and is currently resting on SD1. So in short, holding it, this level could easily bring prices back to the HV area, and perhaps, if broken, to retest the highs recorded today. Otherwise, a break of SD1 could easily lead to, well, rather violent pullbacks down to around 112.30, roughly in the area of 1D minimum. As for dollar yen, obviously it's on the opposite and mirror movement, with the dollar strengthening against the yen. At the moment, the range we had indicated has been broken upwards, registering a peak because it's a bit more volatile compared to euro-dollar. Dollar-yen went on to recover, breaking, no, initially it was stopped at 1D max. Then it worked on the VIX cluster and went on to close by touching the value area high, and then eventually closed right on 1D max. This morning, during the night, it moved a bit sideways between RD0 and SD0 before breaking out. At the moment, it's already working above RD1, so we could easily go on to test the 145 area, which corresponds to the VIX area and 1D max. Perfect. With this, we have reached the end of this morning briefing, which was a bit longer than usual, but there was a lot to discuss. As always, I invite you to leave a like on the video. We'll talk later in the chat. Thank you all for your attention, for your